What is wrong with TOPGLOV's latest result announcement? Why are most analysts are so bearish on the stock just when the market thought the worst is over? In previous episode, I mentioned that TOPGLOV being the market leader in a rather generic industry, its performance is deemed as a leading indicator to the entire glove sector. So when TOPGLOV is not performing well, the market would assume that the rest of the glove producers will suffer the same fate. Hi everyone, I'm Mr. Te from the Modern Remisier. Welcome to the market highlights. In this series, I would update interesting events that happened recently and see how we can adjust our portfolio according to this event. Why are we talking about the glove sector again? In Malaysian stock market, especially among the retail investor, the glove sector has been a hot topic after going through a dramatic roller coaster ride during the pandemic. Last month, in mid of June, TOPGLOV announced its latest quarter report, the third quarter financial report, and it triggered a sell down in the entire glove industry. Now you might say, oh, you are one of those who say the worst is over, what is going on now? That is why it is very important to keep an investment journal as recommended by many investment gurus. The market is full of noise, and being human, no matter how hard we try, we are not immune to the noise. At times like this, it is very important for us to revisit the reason behind certain financial decisions and see whether they have changed. Because things change. If the same reason that impacted our financial decision in the first place are no longer the same, then it is appropriate for us to review our financial decision. This sounds counterintuitive, but a good traders, good investor, good decision maker change their mind quite often because they are constantly challenging their own idea. On the other hand, there's a saying that bad traders divorce their spouses sooner than they abandon their position. Now let's look at our journal in March 2023 when the second quarter financial report was out. You may click the link above to view the whole video, but generally there were three signs indicating that why the recovery path for the glove sector has already begun. First sign, it was TOPGLOV's decision to raise the ASP, average selling price, signaling that the glove producers are at least taking some bargaining powers back. Second, in the second quarter financial report, TOPGLOV reported an increase in sales volume of 6% quarter on quarter, signaling that the inventory replenishment has already begun. And third sign, it is the market consolidation as many new entrants have exited the market and established producers are retiring some of their old production lines. In that video, I also mentioned that the market will always find its equilibrium, just a matter of time, but only with one big discount to its previous position or valuation due to a prominent market share is now being taken by the China producer. Look at the first point. TOPGLOV did increase its ASP in the latest quarter, but only to $18 per thousand pieces compared to $21 guidance in March 2023. It suggested that TOPGLOV's decision to hike the ASP is facing some resistance from its customers. Move on to second point. Even though there's an increase in sales volume in second quarter, in this quarter the sales volume dropped 21% quarter on quarter as soon as the company decided to raise the ASP, while Thailand and China producers reported growth. What does that tell you? It reinforces our view that the customers are not taking the price hike well and they are switching to the Thailand and China producers. This is not good. Looking at the first and second point, we ought to do some discount on TOPGLOV. But then again, it is not really that unexpected. After all, the industry utilization rate is about 30 to 40%. It means that if there are 10 glove producing machines in the world right now, only 3 to 4 of them are operating, the rest are idle. Idle machine means short delivery time, and short delivery time hands the bargaining power back to the buyer. How so? Because most of the machines are not operating. As a buyer, as soon as I place my order, they can start operating right away. If you raise your price, I can wait. There's no urgency for me to restock at all due to the short delivery time. Yes, some discount is warranted, but it is hardly a surprise to me at all. Judging from the market reaction, perhaps the market has overestimated the speed of recovery in the first place. Now move on to the third point. Market consolidation is accelerating. HARTA Rega is decommissioning one of its production facilities, taking out 13 billion pieces per annum. TOPGLOV has decommissioned 2 production facilities and is now temporarily shutting down 17 factories. This will take out about 40 billion pieces per annum. SUPERMAX has also decommissioned 3 older production plants taking out 3 billion pieces per annum. Whenever possible, I want to stuff in some investment knowledge in the Market Highlights series because these insights are way more important than the market information, which is changing all the time. Here it comes. There are reasons why some industry or companies can do better in pricing their products. Last month, I talked about Tesla and how the fixed cost of an industry is one of the key factors. Unfortunately, most of this quality cannot be found in growth sector. That is why the product prices are now being dictated by the buyer. Except for one, that is, the biggest 4 producers in Malaysia make up about 60% of the world's market share. If they work together to consolidate their production lines, it ain't a force to be underestimated with. And the fact that the price gap between Malaysia and China producers has narrowed down to $3 per thousand pieces from 5 previously tells me that the market consolidation is not only happening in Malaysia. What is the key takeaway? I know from technical perspective, a technical reversal is happening. But from an investment and business point of view, I maintain my opinion as I did in March 2023 market highlight, which is, so start buying in now, in batches. When we say the worst is over, it is more like a figure of speech. It doesn't necessarily mean that the earnings will improve from next quarter onwards. But a few signs are showing that the journey to recovery has already begun. Don't rush into the market, wait for price correction. It will happen because as I pointed out, the recovery path is a long one. As to which glove counters, I advise you to stick to the big 4. I prefer HARTA Lega. That is all for the market highlights of June 2023. If you want a more frequent and timelier updates, or if you have any questions for us, you can click the link to the Google form below and we will get in touch with you. If you like this video, do the usual, like, share, subscribe. Until next time.